Good afternoon. The time here is 5:30, 37. Um, as usual, I I do analysis every weekend. I look at what the week is going to offer and look at the forecast for maybe the coming month or the coming weeks as usual. So like this is a routine I do all the time. And I think it's been a long time I uploaded a video here, so why not? So as usual, I'm going to be analyzing BTC and gold. Um, with gold, I think I saw this crash coming, and I sent it in the group that I'm expecting a crash from 5,400. Just that it squeezed a little bit about 5,400 before the main move happened. Okay, I saw this crash, so I'm going to explain why I said what I said and why I saw this crash, and what I'm expecting from gold for the coming weeks. And yeah, and also with respect to BTC, I'm going to explain BTC, my forecast, what I'm expecting on BTC. Not forgetting fundamental facts as well, because the market is moved by uh, uh, both fundamentals and technical analysis. You can't just depend on technical analysis. You have to be fundamentally inclined. You have to be fundamentally informed, because macroeconomics data, they all affect the markets. They affect the markets in a massive way. Personally, I don't believe only macroeconomic data or fundamentals affect the market, or just technicals affect the market. I believe the combination of these two affects the market in a good way or in a bad way. So you have to take into consideration these two factors. So without saying much, I'm going to be explaining, and I'm going to start from BTC. And like you all know, I do my analysis from the higher time frame, okay? We all know the keyword we use, which is top-down analysis. So top-down analysis. So top-down analysis is analyzing the chart from a higher time frame to a lower time frame. So it's like decentralizing data. So you start from the higher time frame. You look at what the higher time frame is telling you. You look at what the lower time frame is telling you, and so on and so forth. You come down to the lower time frames. So that is what top-down analysis is. And anytime I'm doing my analysis, I take into consideration this because it's very important. If you don't know what the higher time frame is saying, and you are on the lower time frame, you are going to be lost. So top-down, I'm going to be doing my top-down analysis. And my top-down analysis depends on where we are standing and which time frame you are going to be starting. So this time around, I'm going to be starting my analysis on the monthly time frame, because the monthly time frame is very clear. You can see that BTC has been bullish for a while now. I think anytime I've done analysis on BTC, I've explained this over and over again. But BTC has been very bullish for some time now. And it is very evident. And I'm going to explain again that to determine a bullish trend, you need to see higher highs and higher lows. Higher highs. What is happening to my screen? Is it because it's on the higher time frame? Okay. All right. So like I keep saying, we have two types of trends, which is the bullish trend and the bearish trend. Now, anytime you come into the market, it's the same thing we keep talking about over and over again. Okay, so you have to get used to doing the same thing over and over again. That is when you would understand how the market moves. The same thing, anytime you come into the market, you have to put it at the back of your head that the market moves in three directions. It is that it is buying, it is either it is selling, or it's either it is consolidating, or some people call it ranging. So the market is either in a bullish trend or in a bearish trend, or it is consolidating, which means it's not buying, it is not selling, it is standing at a particular place. So it's doing like this. So for example, when we say it is ranging, it means it has found a specific range in which it is range in which price is moving up and down. It is not breaking above that particular range. So moves price moves like this, goes and hits this particular range, comes down to hit this range, goes to hit this range, comes down to hit this range, goes up to hit the range. So you can see that price is moving in a particular range. This is what is called a ranging market. These two are trending markets. So this is a buying market and this is a selling market. So anytime you come into the market, there are three things. You see that the market is buying, is selling, or it is ranging. Let me bring this here. Let me bring this here so that you don't get confused. And delete this. Delete this. So anytime you are in a market, you see that the market is, so let's say we have a range here, okay? And this is what's happening in the range. And I think it makes sense, okay? Because the market is either moving in two directions, depending on the time frame you are doing your analysis on, okay? You can see clearly that the market is either on any chart you are going to open, you are going to see either these three things, okay? You're going to see three things. It's either you are seeing that the market is buying, it is selling, it is not buying, it's either it's selling or it is ranging. Ranging means it has found a particular range in which it has not broken out of. So it buys all the way, it hits a particular level, and it sells all the way down to hit another level. It doesn't move from the level, it goes all the way to the same level, and it keeps moving in that range. So in a situation like this, we call it a ranging market. In a situation like this, we call it a trending market. These two are trending markets. So this one is trending up, and this is trending down. Now, for a bullish market, it is supposed to have higher highs and higher lows. This is the higher high and a higher low. So that is how you know if we are in a bullish market. A bullish market is made up of subsequent higher highs and higher lows, and higher highs and higher lows. And a bearish market is made up of lower lows and lower highs. Lower lows and lower highs. We've explained this over and over again. We keep coming back to it. It's good we keep explaining it because you have to get used to. It's boring. Trading is sometimes boring because you have to keep doing the same thing over and over again. That's how come you're going to get better at it. So let's continue. So if you understand these three things, we are good to go and continue with our analysis. Now, like I said, we are analyzing on a monthly time frame. So when you come on the monthly time frame with the three things I just explained, when you come on the monthly time frame on BTC, what can you see? You can see clearly that price has been what? Buying. It has been in a bullish trend on BTC. From the down, it has been in a bullish trend on the monthly time frame, okay? It has been in a bullish trend on the monthly time frame. Why? Because it is made up of what? Higher highs and higher lows, like what I just explained over here. It's a bullish trend on a monthly time frame because it's made up of higher highs, higher lows, higher highs, higher lows, higher highs and higher lows and higher highs. Now, there is something that has happened here, okay? Why? What has happened? Our recent low has been broken, okay? Our recent low has been broken, which means, where is it? This is our low. This is our low. It has been broken, okay? This low has been broken on the monthly time frame because this candlestick, this candlestick broke this low on a monthly time frame. So immediately this low was broken. It means on a monthly time frame, I am bearish. Immediately, this swing low has been broken on a monthly time frame. I am bearish. Why? Let me explain. If you understood the explanation I gave with the trending market, you should understand this. Now, I explained that a market is bullish. A market is bullish when it is made up of higher highs and higher lows. Now, it is also bearish when it's made up of lower lows and lower highs. Okay, now, how do I know this market is about to turn around and become a bearish market? Because the way the market moves, it's not going to be bullish for a long time. It's not going to be bearish for a long time, or it's not going to range for a long time. It is definitely going to change from bullish to bearish, or it is going to change and range. You get it? But now, how do you know if the market is changing from being bullish to bearish or being bearish to bullish? Now, this is what you do. When a market is moving like this, normally this is how it's supposed to move, okay? Higher highs and higher lows. That is how we know it is in a bullish trend. But immediately the recent low is broken, which is this. This is the last low it created, okay? This is the last low it creates. Immediately this low is broken, you should be looking for sell opportunities. Not selling here, you should be looking for sell opportunities. Now, sell opportunities is where you wait for a retracement into this zone and look for sell opportunities to the downside. Okay? Immediately this low is broken, it means structure. I don't want to mention structure because we are still on a 1 month time frame. Immediately this low is broken, you have to start looking for sell opportunities because it is not respecting our uptrend again. Because this normally this low is lower than this high. Okay, so this one is higher than this one. This one is higher than this one. This is higher than this one. But all of a sudden, it breaks this one, meaning the trend is changing. Now, when the trend is changing, you don't take your entry from here. You wait for retracement, and you look for sell entries from this zone to the downside. So this is the same idea we are going to use on any time frame we are on. Okay, this is the same idea we are going to use on any time frame. So if you understand this, we are going to apply this on a monthly time frame. Now we're on a monthly time frame. You can see clearly that this is the last low that was created by the market on the monthly time frame. So this being the last low, we have to outline it. This being the last low, you have to make sure you draw it clean. So this was our last low created by the market. Okay. Now, if you notice, when it was buying, anytime it creates a low, it respects it. Okay. It created this low, it never broke it. It created this low, it never broke it. It kept respecting it. You get it? So why would you come and break this low? Meaning you want to sell more. Okay. Meaning you want to sell more. So on a monthly time frame, it is strictly very bearish. Why? Because this low has been broken. Now, once this low has been broken, the monthly time frame is bearish for me. So I go, like I said, we are decentralizing data from higher time frame to the lower time frame, top-down analysis. So on a monthly time frame, once this low wasn't broken, the time price was around this zone, I was still bullish on a monthly, but immediately it got broken. The monthly time frame is also screaming sells. Now we go to the weekly time frame. Now the weekly time frame is definitely going to give us different information. But let's come here. What do you see on the weekly time frame? Now on a weekly time frame, you can notice that on a weekly time frame, let me delete this. Okay. So at least we have this zone at the back of our head that is a sell zone. Now on a weekly time frame, you can see clearly that from the downside, from here, where is this tool? On a weekly time frame, you can also see clearly from the downside that it has been buying, okay? It has been giving us a bullish trend for a very long time. Okay? And all of a sudden, it started selling, okay? All of a sudden, it started selling. So how if you want to ask yourself, how are you going to determine if this on a weekly time frame? How are you going to determine on a weekly time frame if it was still bullish or bearish? Because this was the last low it created. Okay, when it was buying, this was the last low it created. Now this swing low, you can see clearly that this swing low was even respected here. Okay, you can see clearly that this swing low was respected, but finally it broke it. Okay, on a weekly time frame, this swing low was broken. So immediately this swing low was broken. On a weekly time frame, it became bearish. So on a weekly, you would have to start looking for sell opportunities. So that is what has caused all this push to the downside. Now on a daily time frame, so are we? If I'm right, if we are not confused, are we okay that on a weekly time frame we were bearish from right away from this level? We were still bearish. We were bearish from here, not even from here. We were bearish from this end. Now, being bearish from this end, you can see clearly that on a weekly time frame we have a selling market on a weekly time frame. So let's put this aside, okay? Because it changed here. The trend changed over here. Now, on a weekly time frame, if you zoom in, you can see that the weekly time frame is very bearish because what? It is giving us what? Lower lows and lower highs. Lower lows and lower highs and lower lows. So on a weekly time frame, it is bearish. It was bullish, but it changed to bearish when this low got broken. You can see that this low was respected. Even buyers kicked in here to this upside, but the amount of sellers here were massive that it broke the low. So anyone who was waiting for a retest here would have caught this sell. So at this instant, it was bullish, but immediately it broke this low, it became bearish. Immediately this low broke in, because even this low, it got respected. There were buyers that kicked in, but the sellers took over again and they broke it. They broke this level. So immediately they broke this level, we were bearish. And now it is very evident that we can see that the weekly time frame is made up of what? Lower lows and lower highs. Lower lows and lower highs. Lower lows and lower highs. So how someone is going to say, how are we going to know? Someone is going to ask, how are we going to know if the weekly time frame has changed from bearish to bullish? Now, I'm going to know if this weekly time frame has changed from bearish to bullish if I notice that this sell is not coming anymore, and we make a high, we break this previous low, this previous high, because we break this previous high and we come here, then I'll know that we are going to the upside. It's the same ideology for buy and sell. So if our lows, this one is lower low and lower high. So if our lower high is respected, we are still bearish. If our lower high is respected, we are still bearish. But once it is not respected and it breaks above it, we have to start looking for what? Buy opportunities. You have to start looking for buy opportunities. And the buy opportunities, you are going to start looking for it from somewhere around the zone like this to the upside. But for now, the weekly time frame is still bearish. I would be bullish on the weekly if I notice that my previous low on the weekly time frame has been broke. My previous high, sorry, because this is lower low, lower high. My previous lower high on the weekly time frame is broken. And the previous lower high on the weekly time frame is here. So monthly, I'm bearish. Weekly, I'm bearish, because unless this one breaks, this zone breaks, for now, I'm still what? Bearish. But if it's not broken, I'm still very bearish on it. Unless it breaks. What am I even saying? Yes, that's what I'm saying. So price is now bearish on the weekly time frame, but if it breaks our previous lower high, then we'll turn our direction to a bullish trend. But for now, the weekly time frame is bearish. So if this makes sense, we can continue. Now, when analyzing, one thing you have to take advantage of is key levels. Key levels play a very vital role in doing your analysis. Now, key level is support and resistance on high time frames where the candlesticks have closed. and you have to know how to draw these on a higher time frame. You can notice that from this angle, there is something that happened here. So all these places are key levels, okay? All these places are key levels you have to take advantage of. Now, this is a key level, and here it is very significant that even if you go on the lower time frame, like maybe on the daily time frame or the 4-hour time frame, we are going to see that price got to this level and it rejected a lot of times. It reacted there a lot of times. It didn't break it easily. For example, here, you can see that price got here and there were a lot of buyers here. There were a lot of buyers. They were trying to support it. They were preventing price from coming down. But all of a sudden, there was a break below this low, below this level. So immediately this level broke. It turned into a resistance. It's the same thing. You can see that this level has been respected a lot of times here. So these levels, we call them key level or psychological level. It's the same thing here. You can see here clearly that at this same level, price was having a hard time to go to the upside. Then all of a sudden it broke it. And when it broke it, when it came back down, you can see price was having a hard time to break it. It spent how many days here? We're on a weekly time frame. It spent 1, 2, 3, 4, 5, 6, 7 weeks. It spent 7 weeks here. 7 weeks trying to break it, but I couldn't break it. But let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So on the 11th week, then price decided to break this. On the 11th week, the price decided to break this zone. So immediately price has broken this zone because initially it was a support, because anytime price comes, it bounces. It comes, it bounces. It comes, it bounces. But all of a sudden, this candlestick broke it. So immediately it breaks, it turns into a resistance. Now, turning into a resistance, you're going to be looking for sell opportunities around the zone. Okay, you're going to be looking for sell opportunities around the zone. That is why this place is a key level. Now, it correlates also with this my low being broken, because normally on a high time frame, on a bullish, on a bearish trend, when we want to know whether it is changing, I said when the previous low is broken, we look for entries around the zone to the downside. So at the back of my head, why is this? What is happening? So at the back of my head, this is what I'm expecting. At the back of my head, don't let anyone deceive you. If this zone doesn't hold, then probably there's a fundamental analysis that is going to back it. If it doesn't hold, we are all going to see. If it doesn't hold, it's going to break it. And when it breaks it clearly, you are going to see. That is why you don't just wake up and start selling. Okay? Because I'm saying this is a sell zone, you don't just wake up and start selling. When price comes back to the zone, you have to wait for confirmation. You have to wait for your confluence to fall in place. Because I'm saying this is a sell zone, it doesn't mean immediately price comes here, you start selling. No. Because if price comes here, it can break it. Can break it easily to the upside. What if it breaks it? Doesn't mean we are wrong. No. When it breaks it, because when it breaks it, it's going to be buying. This place is going to be a buy zone. But once it's not broken, it's a sell zone. For now, it's a sell zone. So if we are good with this analysis, I think we are good. Then I have a trend line. I'm going to be drawing a trend line here, like this. I'm going to be drawing a trend line here. I'm going to be drawing a trend line here. Why? Because this is a sell zone. Now, when they buy, when this starts buying to the upside, when price gets here, it doesn't mean you have to start selling. No, because what can price do? Price can come and break above it. So you would have to, that is why you always have to wait for confirmation. It's like you're cooking, like I keep giving this same example. It's like you're cooking. You bring together your ingredients, your salt, you have to bring salt, you have to bring tomatoes, you have to bring onions. But because you have salt and tomatoes, it doesn't mean onion is not needed in the food. So let's say you cook everything. If you don't add salt to it, it's not going to be tasty. So let's say I've analyzed everything and price gets here. My confirmation is my salt. The salt I'm going to add to it is the confirmation to make the setup a very beautiful and clean one. So if I don't get a confirmation, I'm not going to sell. But for now, this is a sell zone. And price is bearish. BTC is very bearish. If you are buying BTC here, I don't know why you're buying BTC because everything is bearish on BTC at the moment. On 4 hour, it's still very bearish. Because even 4 hour, you can see it's giving subsequent lower lows and lower highs. Lower low and lower high. Lower low. Everything is so bearish. So personally, I'm going to be waiting. I'm going to be waiting to sell here, ideally on a higher time frame. But if I see buy opportunities, around this zone, because this is a very key level on a weekly time frame. This is a key level on a weekly time frame. This is a support on a weekly time frame, which is even breaking, but you need confirmation first, okay? You need confirmation first before you buy. Like I said, everything is bearish, so buying is going to be very risky. But well, everything is risky, so you have to be ready to take the risk. But ideally, I'm not going to be looking for buys unless I see the opportunity on a 4 hour. But if I see the buy opportunity on 1 hour, I'm going to let it slide. But if the buy opportunity is on 4 hour, I'm going to risk it and buy all the way to this zone because it is not for me to buy to break this zone. This zone is a clean sell zone. So I hope it makes sense, the BTC analysis. I think that's it. I'm not seeing any. But BTC might drop, huh? BTC might drop more to probably this zone before if it's going to buy, it's going to buy. BTC from all the time frames I'm seeing, it's screaming sales. Everything is screaming sell, 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 sell. Everything is screaming sell. So let's see. Let's see how it's going to go. I don't have a setup yet, but this is what I'm seeing on BTC. Buying here, it is risky. Why? Because everything is bearish. Even 4 hour is bearish. If I'm going to buy here, meaning I've seen something on the 4 hour, I'm not going to risk it on the 1 hour. No. If it's on a 4 hour, if I see a buy setup on a 4 hour, I'm going to take it all the way to this end because I'm expecting price here to push down more. So this is my analysis on BTC. And with gold, like I said, I'm going to explain how I saw the crash, how I speculated the crash that was going to happen. So this is what I was doing. I was asking myself, why is gold buying? Because gold has been just buying for no reason. Like gold has just been rallying up. Sometimes these few months, if you wake up and you buy gold, I'm sure you will make money. Just wake up and buy, you make money. And it was fishy. Like it was questionable, you know. And I think silver was also buying the same way. But just last week, Thursday into Friday, it all crashed. It all crashed. Because I'm sure people are buying. A lot of people are buying. The market, that is how it moves. It comes back, it goes back to sweep liquidity, to sweep all the people who are buying. Because the market needs money to move. So, for example, let me explain. Like it's buying Let me explain with these two levels. For example, the market moves with this algorithm, okay? It buys to where there are sellers and it sells to where there are buyers, okay? This is how the market moves. In simple terms, this is how the market moves. It buys to where there are sellers because there are sellers standing here, and it sells to where there are buyers. Now, before it's going to buy, it needs money to buy to where there are sellers. It needs, and before it's going to sell, it needs money to sell where that this is how you have to imagine it. This is how you have to imagine it. Before the market moves, it just doesn't move like that. Because the banks and the hedge funds, they are the ones who move the market, and they move the market with money. Okay, so before the market moves, it has to accumulate a lot of money before it moves. It's like it's like maybe a stream of water, or how should I explain it? How should I put this? I'm looking for a very simple way. It's not coming. Fuck it. Let's just move on. If I remember a simple way, I'm just going to explain like that. But you have to understand this, that the market, it moves to it moves to a level of sellers and it moves to a level of buyers. Now, before it moves to the level of sellers, it has to accumulate a lot of money before it moves. Now, when it's coming to here, it has to also accumulate a lot of money before it moves. Now, accumulation of the money is what we know as sweeping liquidity. It has to sweep all the people who were, it has to gather all the money. So imagine price wants to sell to this end. Imagine price wants to sell from here to here. It will start coming, and then it will lose momentum because it will realize, for example, it's normally supposed to come from this end to this end. It starts selling, it loses momentum because sometimes you realize you start selling, but price comes, takes you out, then finally goes in your direction. Why do you think it works like this? Have you ever asked yourself why? You start selling, this is you. Okay, this is you. You are here. You start selling from this end, right? Then you start selling, then price decides, okay, I'm not going to sell anymore. It starts buying, and it comes to take you out, hits your stop loss, then finally move in your direction. Why does price move like this? Because it needs money to move. It needs to accumulate a lot of money before it moves in one direction. This is how the market moves. So you have to understand this now and save your money. And before it moves, it sweeps liquidity. So this is what is called liquidity sweeping. Before the market moves, it has to accumulate a lot of money, gather momentum before it moves before it moves in its original direction. So anyone who is selling early would be taken out before the original move. This is how the market moves. So you have to understand this. And the market moves from sellers to buyers. It moves from buyers to sellers. It moves from sellers to buyers. It moves from buyers to sellers. But now, before it's going to move from sellers to buyers, it has to accumulate a lot of money. That is why when you enter the market at a wrong entry, it will take you out before it moves in the initial direction. I hope this explanation makes sense. Okay. So now, like I said, I'm going to be explaining why I was expecting price to retrace to its, why I was expecting this crash on gold. So if you go back in time, okay, let's go to where BTC was. What did I say? BTC, where gold was at $1,000. Let's look for $1,000. I think we can do that here. All right. So this was the level where BTC gold was at $1,000. So at this level, gold was at $1,000. Now let's look for the level where gold was at $2,000. saying for 3,000. I'm trying to make reasoning or make you understand why I was expecting the crash at 5,400. So stay with me. And let's go to when price was at 4,000. Let's go to 5,000. So these levels are very important levels, psychological levels, key levels. Now, we are going to do we are going to have a very intelligent discussion here. Okay. So what have you noticed? That when price got to, look here, when price got to $1,000, what happened? It resisted a little bit and broke above it. When it broke above it, how do we call it? When it broke above, wait, 1 minute. I think we'll see this on a weekly time frame. Let me see. Weekly time frame. Good. I think, yeah, weekly time frame or a daily time frame. One of these. Now, going back in time, good. Let's come back to what we're saying. Going back in time, when now we were at 5,500 zones. Let's say 5,600. So it actually went to hit that 5,600 and it dropped drastically. But now, why was I expecting this crash? Now, when you look at price when it got to 3,000, okay, when you look at price when it got to 3,000, it broke it, came to trade around 3,000 for some time before finally breaking it to the upside. Now, when it broke it to the upside, what happened? It didn't go in a straight direction because the market doesn't move like that. The market doesn't move just in a straight line. It doesn't just buy. It's going to buy to a certain point and sell massively before it moves in its initial direction. Like I said, the market moves like stream of water. It has to accumulate a lot of money before it moves. Now, what do we notice here? At 3,000, when price got here, when price got to 3,499, so we can say approximately 3,500. Price got to 3,000. It did what he wanted to do here. It bought all of the way up, retraced back to 3,000, and finally pushed all the way to 3,500. So let's say here is 3,500. So when it got to 3,500, what happened? It started selling up. So I started selling off, and this was a massive sell, okay? This was a massive sell from 3,500 all the way down to 3,120. So have we noticed something here? When price got to 3,000, it did what it wanted to do, and it's bought all the way up. It deceived everyone that is going to buy. It got to 3,500, and it sold massively from 3,500. It sold massively to 3,120. Let's go to, let me outline this line with a blue line. Okay, blue, good. Now let's go to when price got to 4,000. So when price got to 4,000, what happened? He also tried to do what he wanted to do at 4,000. Then it bought massively. It broke out of 4,000 massively. Where did it get to? It got to 3,380, somewhere around 3,380. Then sold, so let's say 3,400. 3,380 is approximately 3,400. Okay, it's 3,380. Approximately 3,400. Yeah. It bought all the way here. So people were like, it's buying, we are going to be buying. Gold is buying, it's leaving us. But you have to be intelligent and know that the market doesn't move like that. Before it's going to buy massively more, or before it's going to buy more, it's going to crash and accumulate a lot of money before it moves in its initial direction. So that is the same thing it did here. It bought all the way here. It broke 4,000, bought all the way here, then retraced, crashed massively into the 4,000s before finally going in its initial direction. So why is it that price won't do the same thing when it gets to 5,000? So 5,000 is going to deceive everyone that is going to buy. Okay, so this is how come I was expecting a crash. When it got to 5,000, it tried to break it, did what it wanted to do, and deceived everyone. So if you notice, you have to be smart. Okay, you have to be smart. Like trading, you really have to look at what happened in the past and use that data, because it's not just technical analysis. You have to know what is happening and know what to do for the future. From the past, like I'm explaining, we've noticed that immediately price breaks out of the thousands. I should say the thousands. So when price was at 3,000, it broke out of 3,000 all the way, started buying. So a lot of people were buying. So if you were buying here, you would definitely make money. But if you don't know where to take your profit, it will come and take you out before it moves. Now, people who were buying, a lot of people were also buying here. They were buying, they were buying, they were buying, they were buying. But when price got here, it crashed massively. Okay? When price got to 3,500, it crashed massively all the way to 3,120 before finally moving in its initial direction. Same thing here. When price got to 4,000, which is the thousands, 4,000. So we are looking at key levels here, psychological level. So our psychological level here is 3,000. This here is 4,000. This here is 5,000. So I'm going to expect the same thing if we get to 6,000. So 3,000, it got to 3,000, broke up all the way, started buying. A lot of people will buy. A lot of people will buy. People are buying. People are excited. Gold is buying. Gold is buying. But it crashed all the way down before moving in the initial direction. It has to accumulate a lot of money before it goes. Same thing. Look at this 4,000. When gold got to 4,000, it did what it wanted to do, broke out of 4,000, went all the way to 4,381, and crashed massively back to the 4,000s again. It crashed massively back to the 4,000s again before moving in its initial direction. It's the same thing. It is not, this is not, how do we call it? This is not rocket science. Same thing is going to happen when it gets to the 5,000s. 5,000 is going to, yes, it's going to tell everyone I'm going to be buying. A lot of people are excited, you're buying. It's going to buy. But definitely, I was expecting it to crash. I was even expecting the crash of 4,000 from 5,400. But it's even squeezed a little bit up above 4,500. Then crashed. People are like, no, gold is crashing. But this is what the market is. This is what the market is going to do. And the market has given us clue that it has done that several times. So why wouldn't you rely on the past data and use it to analyze your present data? So this is how come I was expecting a crash on gold. And this crash, it is not bad news, it is good news. It is a time to look for more good entries for buys, to buy to the upside. It is the time to look for entries to buy to the upside. Gold is going to buy to wherever it wants to go. I don't know, because gold is a safe haven. It's a safe haven, I should say. Yeah, it's a safe asset that banks, when there's tension in the world, when there's tension in the world, when there's uncertainty, investors invest their money in gold. So gold is never going to crash to zero, never. Just that when it's buying, it resets before it goes in its initial direction. So you have to know this and know this well. So that is how come I was expecting a massive crash on gold before moving to the upside. So if this makes sense to you, this is a reset. And coming weeks is going to be beautiful weeks to look for buy opportunities to the upside. For now, I'm not seeing any solid buy opportunity yet, because the sell might drop more, or we don't know where the sell is going to be up to. Because normally I do my analysis on the 4-hour. I look for supports and resistances on 4-hour and 1 hour. But so far, I'm not seeing any strong support or resistance on 4-hour. The only thing I'm seeing is this, so resistance, this is a resistance as well. This is another resistance. So for now, gold is very bearish, but it doesn't mean I'm going to sell. This is the time to look for buy opportunities. This is the time to look for buy opportunities because I was expecting this crash. So I'm going to keep updating the group when I see an opportunity. And this crash was a reset. This crash was expected. So anybody who was buying here, I'm sorry, it's time to buy again. So yeah, these are my analysis. And with DXY normally these days, DXY doesn't correlate with gold, so I really don't look at it so much. But yeah, DXY, which is the dollar index, it was crashing. I can see it's holding at $97. I can see it's holding at $97. So probably I'll be looking at DXY holding here and buying to the upside because it didn't break up. It didn't break below this level. It didn't break below this level. So once it didn't break below this level, DXY should be pumping up again. And let's see what this week has for us. So stay active in the group and I'll update you guys. But it's simple. Trading is a bit simple, just that we complicate it. Yeah, sometimes this is difficult for me because sometimes it's difficult to stay disciplined because you have to be more patient, but sometimes FOMO will catch you. Like FOMO, you think you're missing out. It's difficult. Trading is more than just technical and fundamental analysis. It's more of psychology as well and risk management. So I wish you guys a happy weekend. Let's see what this week got for us. Peace out.